All right, guys, welcome to the Buff Show. We are here. We're going to talk about the difference between closing costs and down payment. Today, I feel like a lot of times it gets lumped into like one big thing. And so people just don't really know the difference and what's covering what and where money's coming from. And so we have Shelby here with First Community to tell us kind of what those are. So closing costs, we'll start there. Like, what do you see buyers versus sellers and what does that cover?
For sure. So closing costs specifically are just fees associated with your loan. So those are any origination fees from a lender, any rate buy downs, anything like that associated with the loan. Then you also have an appraisal, and you have your title fees, and you have your, prepaid escrow account that we have to account for. And then, just anything like that that could possibly be lumped in. So, sometimes we quote for homeowners inspections. If you want to lump that into your closing costs, most people pay out of their pocket and things like that. But those are all closing costs. So those would have to be associated with the loan. I'm very passionate about helping people understand these and what to shop for, because your down payment's your down payment, right?
Yeah.
Different programs require minimum down payments, or you have a lump sum that you're going to put down no matter what.
Yeah.
And it can put you in different categories for different programs, or you may have to do down payment assistance. But closing costs is something that can vary, and those come straight out of your pocket, just like down payment does. So it's important to make sure that you're saving money. One of the biggest things to look for in closing costs is the lender fees specifically, and see how much you're getting charged for a specific rate, and then also what their lender fees are. You may see a processing fee or an underwriting fee or a doc prep fee or something like that, but those are the ones you want to look for. The others are just going to be third-party fees. So those are going to be your appraisal and your title and your homeowner's insurance and things like that we have to account for. But most of the time, your agent is going to provide the title company, and you're going to shop for your own homeowner's insurance company.
Yeah.
And appraisers are generally priced around the same. So no matter where you go, those places are going to follow you with whatever lender you work with, and those fees are going to be pretty stagnant. However, the lender fees can change. So those are the things that you want to look for what they're offering. So that's a good summarization of closing costs. But it is good to get a breakdown and know exactly where everything's coming from, because sometimes you could be paying $10,000 to buy your rate down, and that's definitely, with everything else, not 2 to 3%. So I think it's really good just to know where everything's coming from. But generally, as a rule of thumb, we actually do see that correlate pretty often.
Cool.
Yeah. So,
and then on the seller side, we usually like to say like 1%, because you obviously don't have like all of your lender fees with that. It's mostly just title and transferring all of the stuff over.
For sure.
So that's kind of a good number to plan on. Like Shelby said, definitely like shop your lenders. Don't shop just the interest rate. Shop the origination fees, shop the lender fees. All those little things add up so quickly when you're buying a home, because you've got just so many things that you're paying for. So even saving just a little bit helps a lot.
Yes. And you definitely want a loan officer who's really knowledgeable about the loan estimate. This is something like Fannie and Freddie require it. It is a regulation. It is law that we have to provide this within 3 days of receiving your purchase contract. So once we go under contract and I get that, we put all the information and it triggers disclosures. We have to provide a loan estimate within 3 days of getting your loan. So that's also something, if you're shopping multiple lenders and you're giving them all your information, you can compare loan estimates. We are bound by those. So they're also a little bit higher than what the closing costs at closing would be, because if anything comes in higher than that initial loan estimate, then we have to cover it.
Okay,
so if we quote the appraisal, so if we quote the appraisal for $500, it comes to $700, we got to take the loss for that. The only thing that we don't take a loss for is if you decide to buy down your rate more. We quoted you this rate, with this fee. If you decide to buy that down more, or, change your homeowner's insurance company or something like that, those are all the borrower's decisions. We call that a change in circumstance, and we have to disclose that as well, but we don't have to cover those specifically. So
that makes sense.
Yes. So those are very important to look at, and I am very passionate about coaching people through those and what to look for. So
okay, cool. And then on down payment, I wanted to touch on like your down payment is what the lender looks at as like having that 20% down that everyone looks for, puts you in different interest rate brackets, drops your purchase price essentially because you're putting cash down. You guys drop your loan.
Yes, your loan amount. Yeah, exactly.
So.
Your down payment can help with a ton of different things. It can vary, with what your interest rate is, and that bracket, your loan to value is really important. So that's your purchase price minus whatever you're putting down. Mm-hmm. That's what we call the LTV, because at 100% loan to value, that's if you didn't put anything down, So it can definitely vary on your interest rate. But not only that, but if you don't have 20% down, you have to, purchase PMI as well. That's private mortgage insurance. The more you have down, the cheaper it's going to be, because the less that 20% gap is. And your credit also really helps. If you have better credit, more of a down payment, then the cheaper your loan's going to be all around. But, minimum for conventional is 3%, FHA is 3.5%, and then FHA, USDA, and VA can all be 100% financing. But those also come with different consequences as well. Yes. So, yeah.
For sure.
Lots of fun stuff. But down payment is, that's something that you can get some help on as far as gift, or you can even use your retirement account. In 2022, I got 4 families in homes with retirement income for them using that for their down payment. So I'm not going to pretend like I'm a tax expert or know the implications of that. So I always recommend, if that's something you want to use, you need to call your retirement company. But most of the time, they do a penalty-free first-time home buyer withdrawal. So, and in my personal opinion, I'm sure you'll agree with me, but pulling some of that investment out to purchase a home, you're going to get way more of a return than you would if that $15,000 was sitting in your retirement account.
For sure. So, not only that, but you have your own home, place to raise your family or retire. I know one of the people you're talking about.
Yep.
And they're the cutest couple. They don't have any kids at home, but they are just enjoying their chickens and their farm.
Living life.
And they're so happy to be in a home that they can do what they want with. And
so when they came in and talked with us, they're like, we just want to know where to start. And they're like, we don't really have a lot of money. So I brought that up. Well, what's your retirement account look like? Oh, well, we have a ton in there. Oh, great. We'll call them and see what you can do. And then before you know it, we were rolling. So it really is that thing that can really help people. And if you think of the average, time frame or how old you are when you're buying a home right now, would you say like mid-20s, early 30s? I think a statistic even said like early to mid-30s is when people are, starting to get in. You've been employed for a minute, or at least hopefully you have by then, and hopefully collecting your retirement account. So that's always an option to look at for sure.
For sure. I love that. Okay, well, cool. So that's why you have a lender. So you can dive into all of the things we've just touched the surface, I feel like, on down payment and closing costs. But yeah, you can contact Shelby. We'll have her contact information. She's great. We love her. And yeah, we'll see you guys back on another episode.
Thank you.
Yeah.